Hello, everyone. Happy Monday. How's everyone doing? Last day of March. Tariffs are a brewing. Good morning, John. Good morning, Daniel. Good morning, Sterling. Good morning, Patrick. Thank you for putting in some of the news this morning, Sterling. PMG, good morning. Good morning, Jacob. Good morning, Harold. Good morning, Royal Palms. Good morning, David Atkins. Good morning, Charles. Good morning, Ted. All right. Good morning to people hiding in the background. Thank you. Thank you for being here. So, interesting way to start the week after we say good morning to Heinrich. Interesting way to start the week with tariff talk across the board, but I guess we have to wait till Wednesday. We don't know. Could it still reverse by Wednesday? Who knows? Uh, so, we'll have to see. We will have to see. All right, what's going on this week besides tariffs? And the beginning of the week's all going to be about tariffs and about this is going to happen, this is going to happen. So we could see selling pressure. We could see if a positive thing. They're actually the tariff talk is overblown. It's not going to be as broad based. We'll see. We'll see. You could have snapback rallies again. We'll have to use the technicals, but from a longer perspective, just know where your stops are, either longs or shorts. From a short-term perspective, you're going to have to be on your toes because volatility is not going to go away this week. Today, we have Chicago PMI coming out at 9:45 Eastern. So 15 minutes after the cash open, and Dallas Fed Manufacturing Index, but really not a lot. Red Book tomorrow, ISM manufacturing PMI numbers, JOLTS numbers, which will be important, Dallas Fed services. Wednesday is pretty much crude numbers, and we got Fed's Kugler speaking. Thursday is the ISM numbers, ISM services numbers, and jobless claims, and then Friday's non-farm payrolls. And we got Powell speaking. And we'll have more clarity on the tariffs by then because it's Tariff Wednesday, the 2nd. So, by the way, I'll be live with Bob and Jim tomorrow on Futures Edge. And if you saw the retweets, we are announcing that there's going to be some product coming out that we're working on. So you might want to stay tuned and listen to that. What else do we have? Was this quote of the day from General Alfred Gray? Take what you get, make what you want. Okay, we have the quote of the day from Sterling. In terms of the markets, it's pretty bloody out there, except for telecoms. Well, we keep an eye on Verizon. Keep an eye on Verizon coming up. It's one I'm also watching for potential another dividend play and at a good valuation. Not to say it can't drop more, but it's getting into some potentially territory where I'm looking at it. And it definitely, you got stuff like defensive stocks are being rotated in today and out of mega caps. Here you got everything's down, but consumer defensive is only down 10 basis points. So Fed Watch now has a cut in June, a cut in July, and a cut in October so far priced in. But remember, with the numbers on Friday, they are somewhat, core PCE and super core PCE are still elevated. So we could get into somewhat of stagflationary environment. Well, we're going to have to keep an eye on that. We're still now we're back into extreme fear. Schiller PE still 34.75. So from a fundamental perspective, this market could drop a fair amount. What time will that happen? Let's see. I think it's 1 p.m. my time. So, and I'm on Mountain Standard, which is the same as Pacific Daylight. So, I think it's around 4 p.m. Eastern. But you're going to want to watch the live stream anyways, because it's not just about it's the product analysis minor. It's the live stream, the monthly that I'm on every month with that. So you're going to want to tune into that. Anyways, earnings this week, there's really not much. This morning was filled with stuff. This afternoon is filled with stuff, but nothing market moving. Really, the only interesting things are going to be Restoration Hardware after the close on Wednesday, just because of the higher end consumer, and that's really about it. that is really about it from my perspective. All right. So, by the way, I'm going to be changing up the charts. We're going to rotate them back to non-back adjusted. So there's going to be gaps in them, but it's going to be more consistent with calling out things, especially for the product that's launching. So you're going to see some levels change up over this week. I'm going to start making the transition the way I used to do it with non-back adjusted charts. Until then, so you're going to see levels slightly change. But based off today, we had Friday sell off. We're trying to hold the low area from the middle of March. If that breaks, the cluster area is 54.85. You see we have a direct cluster there on the double top final target and the level. Oh, that's levels off. Sorry. The cluster's just below that. So from the top, didn't anchor that correctly, from the top of Wednesday the 19th to the lows of Thursday the 13th with the 12.5% harmonic. That gives us a cluster right around this 54.79 to 54.85 is the next key price. That's the next key price to downside. Now, do we have a potential double bottom? Yes, we do. Now, hey, if Trump says it goes easy on the tariffs, or maybe they're not as bad as it seems, and we get some rip your face off rally, you do have a potential double bottom here. It's a long way off from triggering and could get invalidated with price action today, but it is still there. Okay, well, and there will probably be some front run signals there because we are getting to oversold conditions. We are getting near cycle bottoms. That does not mean this has to stop just yet. What would invalidate that potential double bottom? What would invalidate it would be a trade below. It's pretty much if we test this area. See, I just did the reverse harmonics down here, which gives me 54.92.25. Any trade below 54.92.25 takes a potential double off the table. But you can see how everything's clustering at this. If we do continue to sell off, that's going to be a very key magnet area that I'm watching for. So what would trigger that double bottom? Well, it would then need a close all the way back above this high from Tuesday, March 25th. Now, there would be front run patterns. We'll have to see what happens if we get to those. I'll tell you what I'm watching for. Like if we get percent B buys, there will be key harmonics if we start really rallying, or it's just going to be a momentum play if Trump dials back the tariffs. It's a big unknown this week. It's all based off of, hey, what leaks are going to come out even before Wednesday? All right. So that's where it sits. By the way, the next magnet price, if we do take out that cluster below, that's the 87.5 harmonic. Okay. Hey, Richard, how you doing today? So that's what this is a week that we're going to have to just be on our toes. And also remember when we get back to the S&P, we had the channeling. So we had initial move down, the channeling double pattern, which hit the first and second targets on this one. The spiders hit all three. And then we came back down with the price action on Friday. Very bearish price action on Friday, breaking down below the channel, and now we're following through. NASDAQ, we've even gone to new recent lows. So this could also mean we're starting to get more impulsive moves back down instead of corrective patterns from an Elliott wave standpoint. We're still going to have to take a look at that. But also remember, the NASDAQ did close below the 62.5. So the magnet price cluster back on the back adjusted charts right around where we were from the beginning of August. Remember when we had the yen strengthening? The magnet price is still in. We have a cluster down here. Now, do we have a little mini weekly potential double bottom here? Yes, it's lopsided. What would invalidate that on the NASDAQ? Remember, just because you have a potential setup does not mean it ever has to trigger. What would invalidate that is if we trade below 19,048. So just remember 19,050. Okay, but the major on a breakdown, if tariffs come in and we continue to sell off, I'm really paying attention to this cluster around the 87.5. By the way, today, let me go jump back to the S&P. There's just a lot going on. If we, let's say there's a leak that comes out, no, it's not going to be that bad. We're just going back to reciprocal tariffs, not 20% across the board or whatever the latest leak was. We have a gap to Sunday night. So Sunday night, we had a gap down open on the S&P based on Friday's close. So if we really started a rally either today or tomorrow, my first target would be the gap fill on both the S&P and you see on the NASDAQ. All right. So, by the way, in the NASDAQ, before the potential gap fill, it's really Friday's low. Let me zoom in here. You see the low roughly around the 11th of March, the low around the 13th of March, and Friday's low, that's all right around this 19,350 area. That would be my first target, and then it would be to the gap fill to 19,457. So, also, let me get the Dow. Remember, the Dow also has on the back adjusted chart a big weekly double top that's triggered, a little pause, a return to the rotation zone, and the Dow can really head much lower and reconnect with the, I don't know how all these got messed up. I hate when my levels get messed up. Those are not valid anymore. But the Dow could easily reconnect with its weekly 200 area over the next little bit. Same thing with a gap down from Friday. I mean from Friday to Sunday. So that's the first key area now. And very key resistance on the Dow is 41,760 area. The next magnet price on the Dow is about 41,300. We are also in potential, remember, as long as it traded below the 75% harmonic from the retracements from the low from the 13th up to this high, it traded below 75. That's the first qualification for a potential double. So this is qualified. The stronger doubles trade down. This is the minimum for a double. The stronger doubles, I don't talk about this all the time, but the stronger doubles have to go below the 87.5. The strongest doubles, if you want to know, period, if you also do the retracements, now below the 25% extension, which look at that cluster right, the 87.5, that invalidates it. But the stronger doubles are between the 87.5 retracement and the 12.5 extension. So this little area, anywhere if this Dow came down here, set up the double in there and then reversed and took it that high, that would be the strongest kind of double you can get. Just a little thing to jot down in your trading notebook. The Russell, which remember we had a little mini double. This did not get up high enough to invalidate it. And it was on the fly. You might say, oh, but the daily, it's going through the second and third targets are going through the wicks. It was a setup on the 1 hour. It was completely valid on the 1 hour time frame here, and this goes into the candle bodies that started. That's why we're almost back down that target. I was just looking at this low area from before. So we still have roughly around 2,000, is just above 2,000 is magnet price here. And the same thing, if you get if the markets change course due to something about tariff related, we still have the key area for Russell isn't even the low from Friday. It's to the close to the gap fill of 2037. The VIX elevated again, especially on Friday. We started getting about a 20 mark easily, and now we have a big VIX gap up. Again, not in super fear territory, but definitely elevated. So if this stays elevated, going to be watching, and especially if it starts getting above 25, going to be watching for an acceleration to the downside. The DAX breaking very, very key support. The DAX finally, I said I was watching for rollover plays now in this. We got the first cross the rotation zone. First cross the rotation zone, still, the DAX could easily come back down to the weekly rotation zone. So that's what I'm keeping an eye on. Nothing bullish after breaking key support. And we got the first cross of the rotation zone here. So now, even though we don't trade crosses because they are delayed, it helps keep us on the right thing. So this has to form a stronger bottoming pattern before I can get any semblance of bullishness. Or it has to regain this support and then make some kind of reversal pattern. It has to regain this prior support and invalidate that resistance level. Notes. Let's just take a look at the yields. The yields dropping again. Again, there's a flight to safety somewhat in the 10-year going on now. This is very key, though. Still watching this 4.15, 4.15 on the yield basis. Because that, if we close below that and then follow through with a close below 4, it could get very interesting from a yield perspective. But we're still hanging in there. Dollar index. Still we've hit the first target. This came back down to the 62.5, but has not closed below it. Or it has to trade back down through 103.16 to invalidate this. This came back down to, remember, the key area between the 50% and the 62.5, and now it's looking to reverse back up. It's fighting cycles going down. And on the weekly basis, we still have cycles going up. So now we've had a little pullback, but the double is still in play there. It is not invalidated crude. Crude still trading against the 200, still nothing to invalidate this double bottom. So we're going to be watching if it can break out and finally complete the pattern to 271. And then if it rallies above there, 72. Crude is putting in a very strong floor above the $65 mark. Gold trading at the next minor harmonic. If it breaks through there, the next major harmonic is 33,232. So, what else? Oh, looks like platinum's getting finally a slight little bounce today, but platinum's overall in a huge consolidation area. The yen back to still trying to hold the trend line. Going to be keeping an eye on this to see if we get a possible %B buy set up tomorrow. Other than that, it's trying to kiss the trend line goodbye again. But if this closes back below the trend line, I'll be watching for further yen strength. Euro, after hitting the second target and the 200, a little bounce here. Is still nothing to invalidate the remaining target just yet. Spiders in potential double bottom territory, just as the futures are. Again, we're trading all the way big gap down from Friday. So on any rally, it's going to be really Friday's close. On any strong rally, it's going to be Friday's close to 555.66. 549.86 is very key. 546.35 is the key level below. That does not invalidate the double. What would invalidate the double would be if we traded below 543.02. I can't stress enough, just because you have a potential pattern does not mean it ever has to trigger. So don't just go, oh, there's a potential double, I'm going to try to just magically buy the dip. You have to wait for some kind of setup to form, even if you're trying to front run it. And the major cluster down here is about 542 areas, split in these next harmonic areas. The Qs also in a bigger potential double, that would be a weekly double. You see here it is lopsided. First cross a weekly rotation zone from a couple weeks ago. What would invalidate is a trade below 459.63. We're even gapping below the minor harmonic of 463.03. So that would be my first key on any rally. My first level would be 463. Then we're looking at about 466.50, and then to the gap fill back to 468.94. Other than that, I'm using the minor harmonic levels below. Other things I want to talk about, just to remind you. Hold on one second. Excuse me, sorry about that. Remember, Apple from a couple weeks ago, big weekly double top. Yes, it is lopsided. Yes, it only hit the 75 harmonic, but Apple is still triggered a massive double top. And remember, the first target's back at 199, which is virtually the low area, or the gap open down area from August 5th, from the minor currency crisis. So we can still see rollover plays in Apple continuing lower. Microsoft, this is what I'm saying. There's still bigger patterns. Microsoft, a very lopsided double that nearly hit the 87.5 to make it a higher quality. Now, do we still have potential double bottoms? Yeah, they could get invalidated today. But the Microsoft over the next few weeks to a couple months could easily return to the 200 weekly area. So we have, it's not just that the markets are setting up being bearish. You actually have some key mega caps that are bearish. Why am I pointing this out? Because they're still, even though they've pulled back, even though they've underperformed this year, you still have potential downside. It's going to be real interesting to see where Meta now, look, it was trying to hold the weekly 200. Now it's gapping down below that. So now the 200 could potentially, unless it regains it quickly, could become resistance. So you're losing some key support in some of these mega caps or having longer term patterns. What else? XLI. Not CLI. XLI. XLI did trigger a very large double top. Confirmed it a couple weeks ago and actually triggered it on Friday. So you could definitely see, and look where the final target is with this, just below this key level. So I'd really be focusing on the first and second targets, but could we see more downside ahead? And you also have the first cross of the weekly rotation zone. Now, can it possibly all, if Trump says, oh, I'm just joking about tariffs, they're all just magically going away, could we get a massive rip your face off reversal? Yeah. That's why there's probabilities. But the probabilities on a lot of these things say we're going to have lower prices even with bounce plays. Even on market bounces, I'm still going to be watching for the rollover play until some of these patterns are invalidated. Natty gas, possible basing. I'm just getting back to the comments now. Natty gas. There's not a great pattern from my perspective in natty gas right now. Not a fantastic pattern. Watching to see if this makes a more substantial topping pattern on any rally. This is one, it's just a short term against resistance. There's a lot of little resistance areas in here, so it would only be short term trades from my perspective, and there aren't a lot of great setups. Goldman Sachs, we now expect S&P 500 3-month return of minus 5%. Our 2026 EPS forecasts are substantially below consensus, sees 5,300 in 3 months and 5,900 in 12 months. So more downside correction. Where would that take us? Just even on the March contract to 5,300. That's roughly around the August lows. Okay? So retesting the key August low area. That's going to be very, very interesting. A lot of people would not be expecting that. So, and on the back adjusted chart, that level's not far from the key lows in April also. So that is a very key magnet area also. Even the 87.5 on the back adjusted chart or the non-back adjusted chart. The non-back adjusted chart you see here, we have the very key cluster. You just put in at 5,300 for Goldman, and look at this. On the non-back adjusted chart, we got 53.45, 53.30 to 53.45, very, very key cluster. So I'm agreeing on the further downside below the final double target. That would be the area I'd be focusing on, and a potential even break to 52.50, which is the 87.5 on the non-back adjusted chart. Couldn't the 10-year be traded as weekly head and shoulders to the second target if ZN really catches a bid? Yeah, it can be. It's a little, let me do it here. Hold on. This, yes, this can be traded as a weekly inverse head and shoulders with a flat line. It can definitely, that's why this horizontal line's there. So it can easily be traded, which would be a return to potentially the September highs, which would be a substantial breakdown in the yield. And that's why on the yield basis, you have shoulder that are not very symmetrical. But if you break down and we close below this 4.15 on a yield basis, hold on really quickly, I got to re-anchor this. On the yield basis, if that were to trigger, you'd have a return to potentially the low area from September and maybe even 3.5 yield on the 10-year. So both those are a little weak on the pattern, but they could still be traded that way. Is NASDAQ going to make a new low and stop me out? The trend is still down. It's all going to depend, though, on the tariff talk. Is it a new low in what time frame? You know, I would not be aggressively just buying this unless there was a decent bottoming pattern, personally. Or we get momentum. Well, tariffs are canceled. We get a massive rally with momentum. But you'll know a momentum bar. Like Friday, this was momentum bars down. This was momentum bars down. All right, the S&P and the NASDAQ, everything's open for trading. Cash is open. Let's just see. Not much with the opening bar. Where's the tick opening? Tick spike below minus 1200, but a pretty fast snapback. Pretty fast snapback. So I'm going to be watching to see on the tick rally back to see how far the markets, if it can get a bounce. And then on the next tick rollover play, that will be very interesting. So far, just in the minor pattern, we have a little minor flagging bounce pattern. But if you start really taking out this 55, 58 area, would not be good on the next tick rollover down. All right, thank you. But CNBC just wrote articles about buying Microsoft. Again, look, if there's bounce patterns, I got to trade. Look, we had a potential lopsided double, which is clearly off the table. And Microsoft, we don't talk a ton about financials, but still got a PE of 31.46. If we start getting earnings compression, and this is still not a cheap stock and completely still overvalued from a fundamental perspective, you could easily see this going lower. Now, if we get a great bottoming pattern, it doesn't have to go all the way down here, but I'm going to play the probabilities of lower, even on rallies, rollover plays. Look, the last time, and you will get bottoming patterns. Look, see here, remember the sell-offs all through 22 that ended in October, November? What was this that formed? Against the weekly 200. A double bottom. You can see it clearly, right? So this is where I like to wait for the longer term patterns to form, and then there'll be great buys again. Just wait for the setups. Don't worry about missing a trade. Okay? Just like Apple could easily return to its 200, and Apple's not cheap. And unless these are turning into massive growth stocks, which they're not, Apple's trading at a 35 PE, could easily reconnect with the weekly 200, which it hasn't reconnected with since 19. All right. That's why I can be patient on some of these things. There'll be other plays until then. Hit the wrong thing. Like Verizon will be interesting on pullback plays. Right now, it's been rushed into. Why am I keeping an eye? P to E ratio of 1085. So even if earnings start going down, it's going to raise the PE ratio, but it's got a dividend yield of 6. So, especially on pullback areas, and Verizon's another one I'm watching longer term. All right. We've talked about a couple other stocks I'm watching longer term, and especially on weekly setups. Now, Verizon, I'm seeing if it holds this key breakout level in the short term. Oh, I know you're joking, Daniel. All right. With that, I shall talk to everyone tomorrow. Remember, stay on your toes. Don't trade what you think is going to happen. Trade what is happening in the markets and wait for your setups. This can be a volatility. And know with increased volatility, I have to downsize my positions and keep wider stops in these kind of markets. So smaller positions, wider stops, and make sure they're valid pattern setups with whatever you trade. Don't just guess something. With that, I shall talk to everyone later. Bye for now.